Hey guys, this is Simon with Trade and Perform Coaching. I am doing a game that I do at the end of every day called How Could Have I Traded the Day Better? What could have I done to make more money? How could have I perfected my entry without significantly increasing my risk? Before we jump into that, let me read the quick legal disclaimers that have to be done every time here. So let's jump into that, which is important disclaimer and reminder for all traders and investors. This video and webinar is for educational purposes only and is not a recommendation to buy or sell any particular financial instrument. Equity, futures, options, currency trading have large potential rewards but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with money you cannot afford to lose. Period. End of sentence. No more questions asked. This website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in this video. Past performance is not indicative of future profits or future performance, and the performance of any trading system or methodology is not necessarily indicative of future results. Markets change. Absolutely consult your registered financial advisor. And always, I mean always, consult your risk trading plan before you ever invest or trade any financial investment. Guys, this is not an easy job. There's a high failure rate at it. That's why you have to be better than everyone else and you have to follow your plan. So, coming in this morning, the first two questions that we always have on our mind. What is the market trying to do, and how good a job is it doing actually accomplishing that? So number one, we opened up inside, I'm going to crunch this up, we opened up inside prior day's range. What does that tell me? Neither bulls nor bears are in control. Why do I know that? In order for bears to be in control, really be in control, we have to get below prior day's low and be driving lower, right, to do some damage. In order for, did I say bulls? I meant bears. In order for bulls to be in control, we've got to make progress to the upside, neither of which we did overnight. We had about a 10-point overnight trading range, and the market did pretty much absolutely nothing besides explore price and re-auction overnight. So I'm a big believer in the auction process, right? And I'm also a big believer that I'm looking for a very specific edge, right? I use leverage. I cannot afford to be kind of sort of right. I've got to be really right when I enter a trade, and I'm willing to wait. The reason why I trade ES is because it tends to trade both ways. It tends to do exactly what we did today. Stretch up, stretch down, come back. And that gives me the opportunity to pick my locations, wait for the market to give me its signals, take the trade, and then I'm just looking to take a small part out of the market, like any good gambler would, right? If you're trading leverage, you're a gambler, you better be good at consistently taking money out of the market. That's how it works. So, when we came in this morning, originally the chart looked like this. This zone did not exist. It simply was marked as Monday's high because I thought that was the important location. Overnight, even though this is the end of the day now, we created this HVN at 23.44 1/4. That immediately caused me to pit another zone at 23.44. Why? Because when we get specifically unique looking high volume HVNs that are separated from the rest of the profile, they tend to provide fantastic trade location to get counter rotation. So I want to target those, right? But I have a series of things that I'm looking for. It's not just one thing. It's like anything else. It's a series of things. Like in any other game, I need things to stack up. So when we opened up, we gapped down, right? And we started to drive higher. I did not take a short at 23.44. I really wish I had. I had intended to. I just simply did not pull the trigger. And the reason I didn't pull the trigger was I did not wait whether the high volume node had more weight than the open gap. I thought we might get to the open gap. I wanted to see a push in and a rejection down. Additionally, we were showing an inability to close below or have any kind of two-sided trading. Remember, when you're looking at it afterwards, you kind of go, well, hey, Simon, it was a no-brainer that the market would reverse lower. But you got to remember, when we came into that 23.44, right, this is what we were looking at here. I'll spread this out just to drop so it's easier to see, right? So we come in the morning, and that is approximately 9 a.m. I know that's an important zone, But what that tells me immediately is there's a hole in my trading plan and I need to revise it. I need to decide, which I'll go back and look at samples, what's more important, the high volume node or the open gap above. And also, much like using a Kelly betting system, I could have adjusted my trade size. In other words, I could have taken a quarter of the trade in front of the zone and a quarter in the back. We were pretty much driving higher, and we were greater than a 45-degree angle, which is always a concern for me. That's always indication of a potential trend up, right? But I still could have adjusted knowing that that high volume node was a very high odds location, and I just failed to act there. I didn't take the trade at all. It came and it went, and then by the time I got the I was looking for the rejection bar, and by the time I got the rejection bar, it was so large that by the time I took the trade, what I did do at that point was, when we got this rejection, I realized that that HVN was indeed highly likely to hold, and my trade, which I called out in the room, and I said that if I could get a 50-60 retrace, again, let me push this out a little bit so everyone can see, because it's always easier to see, right, once you know how the day's worked out, right? So I said if I could get a 50-60 retrace back to 23.42, because now I can control my stop, right? 42 with a stop at the high or just behind the open gap would have given me a reasonable risk, even on half my normal size, for potential roll to the downside, right? Again, we're not in a bull market, we're not in a bear market, we're inside prior day's range, so I'm not automatically thinking, I think 26 should get re-auctioned, but I don't know that it will get re-auctioned, right? Additionally, I don't have tick divergence into the high, which is one of the key things that I look for to get aggressive on the short. And so I needed, after these two bars were formed, I needed to trace back up. And as you look through here, you can see we just rolled right over. I could have taken a very small position here and then added to the mid. At the end of the day, I didn't do anything. And so I will go back and revisit. If I could have done it all over again perfectly, I simply would have taken half size, regular stop trade. That would have let me roll on with my day, and I would have ended up with a very nice profit. I didn't do that. It's a place to improve. The next time I see that, it's a place to improve. I'll take a picture of that. I'll document it. I've written it in my journal how I wanted to trade better. So remember, there's 2 points to the trade reviews, right? First of all, I share it with the general public. The first question I want to know is, how can I get better as a trader? What can I do to get better as a trader every day, right? Secondly, how's the price action changing within the market? Because I've got to adjust to that price action, including the range size and the way in which it's accomplishing its goals, right? So the next thing that I do automatically is I look at 23.44 and I go, what I really want now is a rotation down, preferably 10 points, right, with tick divergence. And if you follow through here, what you'll see is we ended up balancing all through the white zone. This is the white zone, and what the white zone means is that buyers are in control above, sellers below, right? And often it'll end up acting as a magnet if we're in balance, right? So what you'll see is we spent a long time consolidating through here, and I didn't really want to do anything in this area. There are small scalps that set up in here, but I'm not going to cover them in the video, right? You can see that we finally pushed back up. We made a retrace about midway through. This is about a 50-60 retrace you'll see right here. And I had another opportunity to take a short here. I chose not to take that short. I could have easily taken it and ended up pretty nice. I just felt, so one of the components is time. What I want the market to do, right? What I want the market to do is this. I want it to come down to an area, bounce out, come back, maybe do a little consolidation and roll down. What I don't want it to do is spend a lot of time like this. Why don't I want it to do that? Because when it sits there and builds in an area like that, it gives people time to build shorts and get bearish, thinking we're going to go to either 32 or down to that 26 or even worse, 18, depending on how big your imagination gets, right? And I don't want to be the one trying to compensate and having to cover for that problem. Now it's odd because at the end of the day, I did kind of get caught out a little bit, and I'm gonna cover that there, right? So, but what I do have, and that things have changed. First of all, we're trading below prior 5-minute lows, right? You'll also notice the size of the bars have shrunk considerably, and tick, NYSE tick, this measures the number of issues up and down on the New York Stock Exchange has gone completely neutral. There's no buyers or sellers in control, and this makes sense because we are right in the middle, right? If we pull up a new chart, see if it'll let me pull up a new chart. Oh, I know what the problem is. Because if you look, when we're trading right here, this is that 37 area. We are trading right in the middle of this junk from yesterday, right? Remember when we just sat here for hours and hours? And guess what it did when it got back there again? Everyone kind of mulled it through and said, well, do we want to push it back up or do we want to push it back down? So a couple of thoughts are on my mind here. First of all, it's not a sharp rebound, right? And so on the one hand, that means the buyers aren't as strong as you wanted them to. But on the other hand, it's not weak. It's nothing is the answer, right? There's nothing to do. And what am I really waiting for? This was the high, 44. Where am I looking for a trade? 34 or further. 10 points are key rotations to me. The average day has been somewhere between 9 and 13 points. I want to stretch just right to the edge of that and find a trade looking for tick divergence. Again, one of the big keys to this when I'm doing this is discipline, discipline, discipline. If this comes in here, right, notice, I want y'all to notice something. Look how many times we've held sometimes. We've passed straight through. We've passed straight through. We held. We passed straight through. We passed straight through. We held. We passed straight through. We passed straight through after holding. We held. Okay, so what does that tell you about that area, right? So remember, if you were going to play blackjack all the time, I'm on a blackjack kick lately, right? All you'd want to bet on is knows if you're going to get 21, right? If I get 21, I'd like to bet all the money I can bet. If I'm not going to get 21, I'll just wait, right? And if we could play that game that way, you would wait all day. You could say, hey, you got to stand there for 20 hours, but somewhere in that 20 hours, we're going to deal you 21. We're going to tell you beforehand, and if you get 21, you can bet as much money as you possibly want on that 21. You're guaranteed to win, right? Well, what this tells me, when the market sometimes holds, sometimes doesn't hold, sometimes doesn't hold, sometimes holds, sometimes doesn't hold, is that I want to do very little trading from there. As a matter of fact, what I want to do is I want to trade away from that area, right? Because what does the market keep doing? It keeps going back to this area. This is the last place I want to put risk on, right? So and then remember, my ultimate goal for the day, although I didn't think we were going to get there after I saw the amount of energy the market had, was this 26. So going back to the chart now, okay, and going back to the thought process, NQ was relatively strong. It certainly wasn't weak, right? We came in, the size of the bars have gotten smaller, right? And what am I waiting for? What I'm hoping for is that people will get aggressive and aggressively move into a key location. Now, I already marked this in the overnight notes, point from which we tend to get trapped back in and support, right? And if you'll look, when we came into that low, we had what I call busted tick divergence, right? And here's what the funny thing I found out. I can tell people all about this trade, and it doesn't matter, because without coaching and training, most people can't repeat their performance, even if they see it one time. So I don't gain or lose anything by showing anybody this. So you can see when we came into this low, there's clear 5-minute tick divergence right here, right? Now, it got busted, but I had a couple of things. First of all, I'm on greater than a 10-point stretch. I have clear tick divergence, right? And we snapped down. Now, I always emphasize this. When you take the trade, you have to leave enough stop the first time in, right? For potential test of, in this case, potential test of Monday's low, you have to leave enough stop to survive. But then what do I want? Okay, so I have a clear picture of what I want to happen in the market next. And I'll show you what that is. I want the market to come in, snap. This doesn't bother me. But what I want it to do is get above here and go like this. I want it to take off to the upside, right? Now, the market is kind of like space, right? If you saw the movie Mars, it's a brutal place. It doesn't cooperate, right? The market does not cooperate the majority of the time. So I've accomplished a couple things to this point in the day. I identified a potential area. It didn't work out for me. I identified a second area. The market didn't give it to me, but the read was right. I'm on a roll, right? I identified that the white zone, buyers are in control, sell above, sellers below, and that was true. Above the white zone, we pushed, right? Below the white zone, we pushed. And then finally, because we were in balance, the white zone ended up acting as a magnet. That's exactly textbook how it should work, right? So I take the long in this area, right? I take it at, I want to say it was right at the close here. So it was either 32 or 32 and a quarter, I believe is where I took it. I go look at my trade log, but it was 32, 32 and a quarter, right? And then my immediate target is 34 and a half, except that the market, after giving these big fat rotations, immediately dies. Now, everyone knows how this market works out, but again, what I want to show y'all and what I'm trying to teach, okay, and I'm trying to coach people to learn, okay, and if you go through this slowly in real time, you're long. First of all, you probably got a little nervous because your tick divergence got busted, right? But it's all right. You close back in the zone. You're on a 10-point stretch. You're looking cool. 5 minutes, 10 minutes, 15 minutes, 20 minutes, finally 25 minutes, right? 5, 10, 15, 20, 25, 30 minutes. Well, let me tell you, I'm a leverage trader. I choose to be a leverage trader. That's how I work, right? If I trade cash, probably not so worried, right? As a matter of fact, if I traded cash, I'd probably trade with 1% stops daily and look for dips because I would very rarely lose money in this current market environment, right? Market doesn't go down. I think we've had 1% down day in the last 4 or 5 months, right? But I do trade leverage, so I have to be correct, right? I'm not saying you should trade leverage, but I do trade leverage. And anyone who trades futures, understand, you are trading a leverage product. So I got in at 32, and after sitting here for about 20 minutes, I decide I want some of my leverage off. So I take half the position off at 33, 1 point. Now, that's not home run territory, is it? But that is getting paid, right? If you can stay consistent in your entries, you stay consistent in your execution, you stay consistent in your discipline over time, and not a lot of time necessarily, you can increase your trade size as you're moving through the day, right? You can increase your trade size moving through through your trading year, right? Advance that size so that you can, so now your 1 points actually become meaningful. And this is where small traders always get cut in. Well, I only made 1 point. You don't get paid for the amount of time you sit in front of a screen. Chris Laurie taught me that. You're a slave to time, right? So I took the trade, and now I have to decide in my trade plan what I'm going to do. I could have simply taken the 1 point off here. That would have moved my entry to 31 and put a stop literally 1 tick behind here. I did not do that. So this goes back to where would I improve? If I were going to improve, I think I would have rather taken 3/4 of the trade off here, put my stop on the last quarter behind, because we all know that it ran all the way back to 44, I think, at the end of the day, and I had a 12-point trade in my hand, which I did not capture. So it's a place for improvement. Now, if you look as we click through, we finally get, let's erase this. I know I'm talking fast, but I try to make these short, right? Go through here, and you can see we're now almost 5, 10, 15, 20, 25, 30, 35, 40, 45 minutes, 55 minutes. So realize something here. You're either committed to this stop or you're out of this trade, okay? And you were able to garner 2 points. That is the initial target, right? I ended up taking 1 and 1.5 on this trade. Nothing spectacular. I couldn't get it to lift after an hour and a half, after an hour in the zone. I took my 1.5 and I went to lunch, right? Now, how could have I done that better? Well, the next thing, see, right? Not yet. So we're almost 2 hours, an hour and a half in the zone. But see where that red line is right there? Closes above all the rest. I could have re-entered this trade on a reduced size, let's say half size, with my stop, right? I had 2 choices, either below 32 or below 30. Either way, it was a relatively small stop. And what this told me is, okay, so think about what's going on in here. You have a bunch of buyers and a bunch of sellers, and we're duking it out. People are like, no, 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 we're going to push it down, down, down. I'm putting money in towards pushing down. And in ES, there's always late entrance, right? Then you have another group of buyers who's like, go ahead, sell as much as you want. We'll absorb all the selling you have. We'll take it. This is the moment where the dam broke right there. and I just came back from lunch. I should have taken a long right there. And if you look at the sequence afterwards, right, came back to backside test, lifts. Now, we're back to the white zone, right? Buyers are control above, sellers below. You see, this creates a little bit of resistance. Look how long we spent in the zone. 5, 10, 15, 20, 25, 30. So if you thought it was going back to 44, you had to have a lot of conviction, brother. Now, I got to tell you, even if I had held this, I'd have been gone over here in the white zone. I just don't think they bust that easy. I don't think we were going to the other end of the range. We didn't break. We failed to test Globex low, and we did not check up on Monday's low or that 23.26. At this point, while I was not bearish, I was bullish because of the setup. I was not thinking 44. So maybe I should have. I can tell you, even if I bought this, I'd have been out from 34 to 37. There's no doubt in my mind. Okay? You see the market consolidates. This is 5, 10, 15, 20, 25, 30, 35, 40, 45, 50 minutes. The only people holding this are swing traders. And here's where I made my trading error. We broke IB low, and usually the first 50, 60 back, that's not a secret. That's FT71's trade. The first 50, 60 back, okay, is a high odds trade. And I short right into that 50, 60 back. But if we take a closer look as to what happened there, right, if you get in there, right, watch this. What I want to see is I want to see a bar at least be able to wick below the 5 minute, but preferably close below that 5 minute, right? So notice, here's where I'm short. There's that 37, right? 1, 2, 3, 4, 5. No closing below. No closing below. I'm a little itchy. Now my original stop, I believe I put on, it's afternoon. It's a short. It's in the afternoon, so it's lower odds. I reduced my trade size to half size. I have a 4-point stop. So that means 37 to 41 or 40 is my stop. Somewhere in that neighborhood, okay? And then looking to reduce that stop. Next bar. Can't trade below. Can't trade below. Okay. At this point, I'm very, very concerned about this. We've been at the 50 retrace for 5, 10, 15, 20, 25, 30. I need, for my style of trading, for the market to snap. When it doesn't, I get concerned. This bar, I forget, I think I actually closed this trade out at 39. If I recall, when we couldn't get below here, I closed halfway through this bar at 39 or 39 and a quarter, right? And then you can see it just trades sideways. It never can get below the 5 minute low, right? It can't close below the last 5 minute low. And you see they finally push, and this is where it finally closes below that 5 minute low. And at any rate, long story short, we balanced through 37 the rest of the afternoon, and eventually we make it to 42. We never make it to 44, right? So it just simply never gets to where I need the market to go, and we just balanced, chopped inside that white zone. So summary of where I could have done better. I would have re-entered the trade after the break of this upside. That's one thing I could have done better, with a stop right below the swing low. That would have been my second entry after an hour consolidation. It's an area I've been looking to improve my trading on, even if I had to cut size, right? This entry was perfect. It was exactly what we planned for the day. It was great. And it would have been nice to get a 50 retrace up here. I would have, going back, I'm going to have to go back and look at the open gap versus the HVN when that occurs, which is kind of rare, and figure out which one's more valuable. So I know how to handle it next time. I'll get that. I'll do the stats on that over the next couple of days. And then I absolutely would have been short here if it would have given me a 50 retrace. It just didn't. That's unfortunate. I thought we could push it back to the white zone from there, and that would have been a nice 2 or 3 points to add to the P&L for the day. But as it was, from a zone count, this white zone held, right? The 24, 44 to 46 zone held first time in, right? And then finally the 34 to 32 zone. All of these zones are posted the night before, right? We have a trade plan, and we repeatedly execute that trade plan over and over so that we can make money. So that's the end of how would you have done better today. Now I'm going to take that information, transfer it into writing on my paper so that it sticks in my brain. There's a connection between writing, what's in your brain. I'm going to meditate. I'm going to forgive myself for what I didn't accomplish, right? I'm going to forgive myself for what I didn't accomplish, right? I'm going to write down what I can improve on tomorrow, right? And the most important thing is tomorrow I'm not going to be eager to make money. I'm going to be eager to follow my trade plan and let the market come to me and give me my setups, right? And more than anything else, because I want long-term survival, I'm going to obey my stops for the day. I will not ever overtrade the account in and out, in and out, in and out. And if I can't figure out what the market's trying to do or how it's doing it, I will not trade, because there's enough days where I do figure that out, where it does come exactly into my trade plan, where I get the first touch of the zones and it pays me beautifully, right? And luckily I get to share that with other guys in the room. If you'd like to come visit us in the room for a couple of days, send me an email at tradeandperform@gmail.com. No cost. Be my guest. Just send that with your whatever your Twitter name is. I will send you back the information you need to follow and be in the room for 5 days. Really appreciate everyone taking the time to listen to me. If you're watching this on YouTube, if you take time to like it, please leave any comments. And if you have any email questions, feel free to email me. I like helping people trade better. So anyways, hope you all had a great day. See y'all tomorrow.